Welcome back. You're still tuned into MF Corner. We still have with us Feroz Aziz of Anand Rathi Wealth and Radhika Gupta of Edelweiss AMC. Now we are talking about something different because SEBI's new announcements, they spoke about creating a new product to bridge the gap between PMS and mutual funds. There was MF Lite framework. They also relaxed the eligibility criteria for registered investment advisors. But let's talk about the new product, the investment product. This will be under existing mutual fund framework to bridge mutual fund and PMS gap. Feroz, let me start with you. This was discussed in July as well. There's still nothing concrete finalized here. Tell us, what is it different now versus what was in July? How would it work? And what are some of the key considerations that you think the regulator should also keep in mind?
Yes, so I think, Sonal, it's a very progressive step. Why? Because today you have some platforms available. So if this platform was a Me Too platform, then it was a useless one. So if you look at mutual funds and PMS, these are two prominent platforms, and people use also AIF for long-only positions today. These are the three platforms. Now this becomes the fourth platform called the investment strategy or strategy ka platform, whatever they actually finally name it. In mutual funds, derivative usage is only limited to selling calls if you have the same asset. If I have a Reliance share, for example, I can sell calls of Reliance share. That's called a covered call strategy. Is possible. You can buy puts and buy calls. This is what is available on mutual fund currently available. Then PMSs can use derivatives only for hedging purposes, is what it is mentioned. Now people might take a little more aggressive stance as a manager, but this is what is mentioned. Now, so this is very relevant because the existing platforms don't permit usage of derivatives very well. And AIF is 1 crore plus. So I'm very excited about this, point one. Point two, if the leverage ratios are reasonable, because futures in India can get you, Nifty futures can get you 5 times leverage, options can give you 500 times leverage. So if the leverage ratios are as worse off as 1.5 times your capital, if somebody put 10 crores and can take a exposure of 15 lakhs, 10 lakhs, he can take an exposure of 15 lakhs, then it will not be exciting. It will not have any meaningful shift from the derivative market to this strategy, even at a mass affluent level. That's point two. Point three, I personally think that a lot of asset management companies have shared strategies with the regulator. I'm very happy that it's bottom up rather than top down. So first, people are looking at ideas, but the regulator is looking at ideas and then forming a framework, which I think is unique and first of its kind. I'm very happy that it's bottom up rather than top down.
So let's get in an AMC view as well. Radhika, what is your take on this new product profile that has come by and something that stands out for you here?
So I've been very excited about it, I think for the reasons Feroz mentioned. But, you know, the fact is that the mutual fund platform now is a very operationally transparent, convenient platform, and the strategies are boxed into categories because they're meant for the retail consumer. Now, to be able to leverage the same platform for slightly more nuanced strategies, for again a slightly more nuanced consumers, is very good for the asset management company. I think it provides us tremendous operating leverage in terms of using the talent of our teams for some new ideas, and it provides consumers more options. I do think, however, the devil is in the details. So when the working paper came out, and there's been, you know, some very good consultation with industry, there were examples of strategies that were out there, potential ideas that were out there, and I think there are at least 2-3 interesting categories of ideas. For instance, the whole space of long short funds can be played in this category because you are allowed to take some amount of hedging that is not just direct hedging. You can do more work in the credit space because the funds don't have to be daily open-ended. So you can have restricted redemptions and you can hold more illiquid fixed income. I don't know what you can do in the unlisted space. You can do some more concentrated equity portfolio, higher risk ones. The current board meeting had a very short note on new asset class. So again, I think it's very important to understand what is in the circular. There was, interestingly, one thing I did note though in the board meeting is they've said that no leverage will be allowed in this platform and hedging will be limited to 25% of the position. So you can't run, you know, a very aggressive long short fund. You can probably run a fund that is 75 long, 25 short. So I think it will be limited in what we can offer, but we're very excited to see the details. Let's see the details.
Okay, so waiting for details for sure, but that's of course the first take and a lot more fine tuning will have to be done. It was such an interesting discussion. I'm definitely not done, but unfortunately we are completely out of time on this edition of MF Corner. Radhika and Feroz, always a pleasure to speak to the two of you, and this time for something so topical. So thank you so much for joining in. and stay tuned for CNBC TV 18 for more news and updates.